Hello everybody, welcome to a segment where we're going to go over how to calculate beta for a particular security. So on the opening page you're going to see we're on Yahoo Finance. This is the page we're going to use to download some raw price data for particular securities that we're going to use to calculate their beta. So we're going to need a couple different raw data streams. The first data stream that we're going to get is the composite Toronto Stock Exchange data, and the second we'll pick a particular security. We'll pick Rogers Communication, popular telecommunications company in Canada. So the first, this is Yahoo Finance's landing page. First we're going to get the composite Canadian data. So here it is. Here it's GSP TSE. So HAT GSP TSE is the S&P TSX Composite Index. If we click on that, we'll come to a page that outlines what the composite index here in Canada has done over the past day. But we're not just looking for the past day, we're looking actually for some of this historical data. So if we click on historical data, you'll come to a page that looks somewhat like this, and here you're going to see a bunch of data for particular days: the open, the high, the low, the close, the adjusted close, and the volume on those particular days. So here we're going to need some data that goes back some time, and we're going to just pick a random day. Let's say the beginning in 2010 all the way through until today is November 15th 2017. We want these historical prices, and instead of taking daily data, which sometimes has too much noise in it, we'll just take weekly. We hit apply, and then we're going to download this data. Okay, so we hit download. It's going to be saved down here as a CSV file. If we open up that CSV file, it'll open up in Excel, and here you'll see the exact same data we just saw on Yahoo Finance, now loaded nicely into an Excel file. We actually don't need to open high, low, and close. We're just looking for the adjusted close that will take into account dividend payments and different stock splits potentially within the composite. We don't need the volume either. I'm just going to retitle this as a TSX data stream here. Let's make this a little bit bigger. And here actually I'm going to just filter this. I want actually today's data the first. So here we can see that we have starting 2010. I want the 2017. I want the past week's data first there. So that's the first step. We have now have the markets composite data in there for Canada. The next step is we're going to go back to Yahoo, and we're going to download Rogers Communications equity. And here you can see there's actually two different classes of Rogers Communications stock on the TSX. We're going to take the B share class at this point in time. So we're going to take that B share. Again, same thing as we did before. We get to historical data. We want this data again from the 1st of January 2010 through 11/15. We want weekly. We apply this, and again we're going to download this data now. The download is going to come through just as like we did for the TSX. We don't need these guys. We delete the volume also. I'm going to sort it just so we have it in the same format as the TSX. We want the newest to oldest. Okay, perfect. I'm going to rename this RCI for Rogers. Remember, it's the B class. We copy this and we're going to bring it over into the file we have with the TSX. So there's our two raw data streams that we need. We have the TSX, that's the overall composite index, the main index in Canada, and then we have the RCI stock, and RCI, remember, stands for Rogers. So the next step along our path is just to make sure we scroll down, just to make sure we have the data matches up nicely. So we have 412 lines, 411 excluding the header. And so in the first one, we want the returns of the TSX in column D. So the returns of the TSX, there's a couple different ways that you can do this. The first way I'm going to show you is actually what we do is simple or percentage returns. So you guys have probably been very familiar with this before. Simply, we're going to take, well, what's the return in the first, right? What did I get divided by what did I pay for this potentially, divided by B3 also. And this is going to give you a return of approximately, turn this into percent, and let's just take this out, 3 or 4. So last week, the TSX was actually down over 1%. Okay, and so that was a bad week for the TSX, but this is just a simple return measure that doesn't take in continuous compounding. More accurate way to calculate returns would be equal the logarithm of this guy here divided by the previous week, and you're going to see comes out to be very, very similar. Okay, and so although the two numbers will be very similar, most of the time in finance when we're calculating different statistical measures, we want to look at continuous compounding. Okay, so we're going to take this and we're going to double click here to bring this all the way down. Now we're going to want the returns for RCI. Okay, so same thing, this is going to equal the natural logarithm of this guy divided by C3. Okay, and again we can confirm that this, we're going to make this into percentage terms, bring it out 3 or 4. So let's just go back to 3. So here we can confirm this is actually correct too, right? So from last week to this week, Rogers is actually up over $1, which is a very good return, almost 1.5% return in a week, as opposed to look at the TSX. TSX lost, right? So that should be negative. This is positive. We can confirm that we have a metric that should make logical sense to us. So we double click here. This is going to calculate all of our returns for RCI, and so now we have our continuous compounding returns for the TSX index and now Rogers communication. So next what we're going to do is actually going to want to create a scatter plot of these two measures, because this is going to be one way that we can actually calculate the beta on here and actually see some of the data on a scatter plot. So let's take the returns on the TSX. We're going to highlight all these guys. Okay, and here you're going to see that actually the last column is this hashtag dividend /0 exclamation point. This is because there's no previous return here to measure, right? So that's always going to come out like that. You can't go in there and delete that, and we'll probably do that in the future. But so I've highlighted the TSX return. If I hit control, I'm also going to be able to highlight the returns on Rogers. So control, highlight, and all the way down we go again. Okay, so we highlight these two streams. I scroll back up here, and here I told you I'm going to insert a scatter plot. So I hit insert over to the scatter plot, click on this guy here, and here we're going to see the scatter plot of these two streams of returns. So on this vertical axis, this is going to give you the return on Rogers communication. On the horizontal axis, this is going to give you plots for the composite index, and you're going to see that there's probably some sort of maybe relationship that we can correspond between Rogers Class B shares and the TSX composite index, which is the general market index in Canada. So we look at this, and that's really what we're trying to find out is beta, is what is the relationship between these two guys. And so we can simply add a trend line to this scatter plot to identify potentially what this trend line is. So I can click on any one of these dots here within there, just left click on one of those, and then once you do that, right click, and you're going to come down here and you see add trend line. I can click on this add trend line, and it's going to provide it's going to put in here this trend line, and I can actually put in here and display the equation and display the R squared on this trend line, and that's actually going to put in a figure for the beta coefficient, because beta, remember, this is just the beta, this is the linear relationship between these two guys. That's really what we're trying to get when we're trying to identify what beta is. So here's the equation that came up. I'll just throw it up here so you guys can see it a little bit better. And so here you can see the beta on this asset is approximately 0.425. Okay, so a very small safe security here we see in this Rogers B class. The R squared is actually fairly low, 0.11 or 11%. That's the percentage of variation within Rogers Class B shares is explained by the market. So actually very low. We're going to see some different ways in videos that will be upcoming that will use additional measures to explain some of the return characteristics of an asset. So here the beta, this is the beta, right? This is the beta. So remember, that's the slope. That's the slope of this line here is 0.425, very small. Now there's some other ways that we can find beta, and one of the particular ways is to just do a regression. And so if we go to data, we can go over here to data analysis. If you don't have data analysis, before you do that, you might have to add a package in. So if we go down to options, if we open options, if we go to add-ins, you need to ensure that you have some Excel add-ins, and those Excel add-ins are really this analysis toolback. Okay, so you need to have that clicked on. So if you don't have that clicked on, make sure you do. If you do, you're in good shape already. So let's go to data analysis. When we go down to data analysis, we're going to scroll down here to a regression. Click OK on regression. And so first it's going to ask us what are Y ranges. Well, our Y range are going to be the returns on Rogers at this point in time, and our X range is going to be sorry, let me just go back here. So our Y range is going to be all these guys here. So the return on Rogers, right? We don't want that last one. The X range, okay, is going to be the returns on the TSX. Okay, we have labels that we have included. In output range, what do I want this output? I want this output to be put right there. Okay, so output range, I have to put it right there for me. And if I click OK, this is going to provide a regression analysis, and you can see here this regression analysis is going to give you your beta coefficient. So here's your beta coefficient in cell I43. You can see this beta coefficient is 0.425. That should look a lot similar to this guy right here, 0.0425. Also look, the R squared. R squared is 0.11104. This should correspond to the R squared in this trend line that we drew. Okay, so a couple different ways that you can find the beta coefficient. If we look at the summary output of this regression that we just did in Excel, you can also see the F statistics of the model is very significant, and also the beta coefficient is significant, right? So this beta coefficient with a t-stat of 7.139 and a p-value of virtually 0 indicates that the return on the TSX is an important factor in determining what the return on Rogers communication is. So I'm going to try to keep this video just around 15 minutes for you guys. So that's just an example of calculating